Hey everyone, welcome back to the channel. I got a very special guest today. I'm very excited to be speaking with Mr. Forrest, a hodler, aka Forrest Stevens. How's it going, Forrest?
It's going well. Thanks for having me. I'm excited to talk all things Bitcoin. You're an inspiration to me with the passive income investing. It's part of my journey of learning. So I
Well, it's
appreciate
an
all the
honor.
content you've put out there.
Same. It's an honor. Thank you so much for that compliment. Really appreciate it. So, as you probably know, I've been getting more and more interested in Bitcoin, Bitcoin related stuff. I'm an income investor at heart, so I would always go for the covered call income stuff, but starting to learn more about it, understand it, and like it more. So I said, you know what, let me try to get a Bitcoin expert or educator. And I love the fact, this is, I reached out to you because I love the fact that you're Canadian. I like your cool, calm demeanor and your style. I like that you understand the cover call stuff. You cover like Misty and the Harvest one.
Mhm.
You also cover strategy, which I'm very interested in. So I'm like, okay, this is the perfect guy. Plus you're Canadian. So introduce yourself to the audience real quick. Where you're from? How did you get into investing and Bitcoin? And go for it. Introduce yourself.
Sure. Sure, yeah. So I live in British Columbia, Canada, and I've been investing for probably around 5 years or so. I came into a little bit of money and started to try to put that money to work, and was investing in dividend stocks, some tech stuff, some broad-based ETFs, and I just saw around me that the environment was very inflationary, right? This was 2020. Housing costs were going up, grocery prices were going up. And I started thinking, okay, what is inflation? Why is there inflation? And then it led me to ask the question, what kind of investments do well in an inflationary environment? And that led me to basically scarce assets, right? It said, stocks will go up with inflation based on more money in the system and that flowing to companies, and housing will go up because it's relatively scarce and can be difficult to build more or add more supply. And then it said gold. Gold is sort of that traditional hedge against inflation. And then it said Bitcoin. And I thought, okay, I know what Bitcoin is. I've heard about Bitcoin. Let me look a little deeper into this. First off, I just threw a little bit of money into it. I threw a little money into Bitcoin, a little bit
Mhm.
of in the altcoins, and just said, "Oh, this is diversification," right? And then I just started researching it more and more, and I started to learn in my opinion, that it was the best asymmetrical bet. It had the most upside, so the highest reward to risk ratio out there for investments. And it just eventually, as I continued to learn more about it, it just continued to make me swap all my altcoins, all my stocks, everything into Bitcoin. And I learned more so that it wasn't just an investment. I actually treat Bitcoin as a savings mechanism. I treat it as what I believe it is, which is money, and it's sound money, which allows you to save in it. There's a max supply. Nobody can make more Bitcoin. As much as I would love to just make Bitcoin and have more of it, I can't, right? I have to go and trade value for it
Yeah.
or mine it. And there's a real cost to production. And when you learn about like the difficulty adjustment, the halving, you start to realize, okay, this is better than the alternative inflation hedge, which would be gold, right? It's more scarce than gold. It's harder to produce than gold. There's less of it being added. The stock to flow ratio is
Yeah.
better, and it's digital, so you can transfer it around. And I just kind of, as I got more into it, I just started thinking, okay, this is going to just take this is going to take something from every other store of value, in my opinion. And there's a huge premium on all other assets because part of that premium is a store of value. People are looking at places just like I was in 2020, looking for something to protect their money, right? And
Yeah.
that's what investments are largely, to protect their money. And that's what Bitcoin does. It's perfectly built to protect your money. And other people will just begin to realize that. And that's what's happening. We're in the adoption cycle of this asset, and we benefit from the purchasing power increase of it because we're in that adoption phase.
I think me and you are gonna get along real good, my friend. I'll probably be able to talk to you for hours and hours because it seems like that the learning curve is very similar to kind of I'm sure it's a pretty common learning curve.
Hmm.
When someone learns about Bitcoin, you start digging, you think about other things and inflation, you start realizing what it is. And obviously, you've been listening to Michael Saylor. I would say that's my number one influence of
Hmm.
learning and really understanding Bitcoin. I mean, someone who's really, really smart like that, and we're going to talk about Michael Saylor and MSTR,
Hmm.
but I just love the way he presents everything with like no emotion, just like it's a fact. And the more you think about it, the more it makes 100% sense, and you start realizing pretty much all the stuff you said. Right. So it really shifts. We'll talk about this later. It really shifts your view on everything,
Yeah.
just the whole financial system and assets and money and prices and inflation. It just changes your whole view of everything. So let's just start because my channel is focused on income oriented strategies, specifically covered call strategies. There's a lot of
Hmm.
a little bit more older audience. I'm 40. I just turned 40. I consider myself old, but I got like 50-year-olds, 60-year-olds are my bread and butter, I would say, because they're about to retire, they're looking for income, they need income in
Hmm.
retirement. That's my bread and butter. To these people who are more old school investors, right, that understand gold, can you explain maybe in the easiest, simplest terms possible for a beginner what is Bitcoin?
Okay. Um, yeah. What is Bitcoin? That's such a huge question. It's so much bigger than most people realize. Bitcoin is there's two different pieces of Bitcoin. There's Bitcoin the network and there's Bitcoin the asset. And the asset is uh, a denomination, basically an input and an output that is registered within the network. So to explain that better, there's the Bitcoin that we buy. If we buy Bitcoin, we're actually buying a UTXO, which is an unspent transaction output, and that is somewhere within the blockchain. So probably people have heard of what about a blockchain, but a blockchain is essentially a record of transactions,
Hmm.
and those transactions are in something called blocks. So there's a certain amount of data space that is created every roughly 10 minutes, and miners create that, and they build the block and they fill the block full of transactions, and in those transactions are the Bitcoin. So if you buy Bitcoin, it's going to be on the blockchain somewhere. That's where it's stored, and there's only ever 21 million of these Bitcoin out there. So every single 10 minutes, there's something called a block subsidy, which is how new Bitcoin gets created. There's 3.125 Bitcoin released every block, and every 210,000 blocks, that gets cut in half. So there's half as much new Bitcoin being released. So for the first roughly 4 years, which is the 210 blocks, there was 50 Bitcoin released per block. And that actually accounted for that first 4 years accounted for half of the Bitcoin supply being released. So we went from 50 to 25 to 12.5,
Yeah.
all the
You're
way
talking
down
about
to
the
where we are
halvings
now.
now, every 4 years, the halving events where Bitcoin gets more and more scarce, or it less and
Exactly.
less is produced every day.
Exactly. Less and less is produced every day, which is, if you look at supply, or if you look at just the basics of economics, and you begin to look at supply and demand. If
Yeah.
demand stays relative or the same and supply decreases, the only other variable in there is price, right? So
Yeah.
price has to move to increase the supply back up. It has to incentivize new sellers. And this is traditionally what's happened. So even though there's half as much Bitcoin being released every roughly 4 years, the purchasing power in dollar terms of that Bitcoin being released, even though it's nominally half as much Bitcoin, actually increases,
Of
say in
course.
US dollars. And that's because more demand and less supply. So what that Bitcoin is it's value, right? We've ascribed it value. And that's what money largely is. Money is something, it's a tool that we don't consume itself, and we prescribe it value, and other people agree on that value and are willing to accept it for goods and services that they do use in other ways. So that's what the tool of money is. So Bitcoin, the unspent transaction output, the value that you can buy, that's what it is. It's money. It's we've all agreed that it's worth something. So one Bitcoin right now is worth, as we're talking, 112,000 US dollars, right? And that's just another measuring stick we're measuring it against. But one Bitcoin really is just one Bitcoin. But we can trade that. So if you have a wallet, I could send you Bitcoin and you could receive it and we could exchange goods and services based on that. So that's what it was designed for, was a sort of a peer-to-peer digital cash that has a cost of production and can't be debased, can't be controlled, and it happens peer-to-peer. There's no central organization that allows us to transact. That's the other thing, is we are actually transacting peer-to-peer. I'm sending it from my wallet to your wallet. The miners, people think, oh, well, maybe the miners are the in-between. No, they're not. They're actually just operating the network, but we're still transacting peer-to-peer. So the miners just validate the transaction. They say this is a transaction. We include it in the blockchain, and all the other nodes, all the other computers running the Bitcoin software all agree that this transaction happened. So that's, and you look at money, right? You know, people think about gold as money, but we also have ledgers as money, which is just a database, right? A ledger is, you go into a bank's database, they have this account sent this money to this, and it's all just a one internal spreadsheet of accounts moving value back and forth. Now that's one central organization having control over that ledger. If they change something, if they make a mistake, if anything happens there, they're the ones with the power to control what happens on the ledger ultimately. Whereas with Bitcoin, the ledger is decentralized. So there's 20,000 active nodes, 200,000 plus unreachable nodes, which still could be active. And they all agree on they all have consensus on one ledger. So one blockchain, the longest blockchain. So everybody's node looks the same. Besides the mempool, which is probably not worth getting into in this discussion, but the blockchain, the finalized transactions all look the same. So we all have accountability. We can all account for the money we have, and no one can change that. No one can take it. No one can change it. And it's protected by private public key cryptography, which is, stronger than what banks use, basically. The network itself has all this mining hash rate protecting it as well from somebody doing a double spend attack, which is spending Bitcoin and then reversing the transaction and then spending that same Bitcoin. That's largely what the Bitcoin white paper goes over. About 80% of the Bitcoin white paper is proving that this concept protects against something called a double spend attack with the cost of mining. Hopefully that explains it. I mean, again, there's a lot more, but yeah.
I definitely learned a lot. There's a lot of stuff it's almost impossible to stop learning about it technical wise, and I come from an IT tech background, so I maybe understood a little bit of that for sure. But to the regular investor, would you say it's a money? Is it a currency, or is it Michael Saylor always refers to it as a store of value? Is it all three? I don't see it as a currency. I see the US dollar as a currency, but I definitely don't see any currency as a store of value. It's just a means of exchange, but it's not really an asset to me. So what do you think is the most perfect way to describe it? You called it perfect money. Michael Saylor also calls it perfect money. I see it as a store of value, as an apex asset, not as a currency. What do you think? How would you describe it?
So I would say that it's all of those things. And it really is dependent on how somebody uses it. So somebody could use it as a currency, right? Someone could use it as a medium of exchange. I think the bigger use case is a store of value. But the way the network works is people do end up having to have to use the network in some way to incentivize miners to protect the network. So there does need to be some use case on chain, whether that's store of value or opening up channels, which is for layer twos, like the Lightning Network, which is a layer built on top of Bitcoin, just as we have banking built on top of dollars or Visa built on top of banking
Yeah.
for different types of transactions. Bitcoin Network has Lightning built on top of it, which is much more for medium of exchange, right? There's social media called Nostr, which allows you to zap, right? You can send Bitcoin, 10, 100 Bitcoin Satoshis, which is a denomination of Bitcoin, right? It's like cents to dollars,
Yeah.
Satoshis to Bitcoin. You can use that as a medium of exchange, right?
Like to buy stuff, you mean?
Sure, yeah, to buy stuff, to
Yeah.
send value,
Yes.
really, and you're getting some sort of value in return. So back to like what it is, though. I think right now, I think money evolves. So I think it is perfect money, and I think money evolves in stages. So money, typically, if you look back into history, especially commodity money, it starts as a collectible. So seashells were collectibles. Gold, finding a shiny metal rock, that was a collectible. There was no universal understanding that this was a store of value or a medium of exchange, but it developed into that. So it develops from collectible to store of value, which is where I believe we're at with Bitcoin. And
I agree.
then, so there's this thing called Gresham's law, which is that that bad money drives out good money. So if you're able to spend, so the perfect example is that there used to be silver in our quarters. And when they got rid of the amount of silver in our quarters, people would say, oh, this is a quarter from 1965. It has some silver in it. I'm not going to spend this one because I know that it's worth more than 25 cents because it has silver in it. I'm going to spend the new quarter because it doesn't have silver in it. So people hoarded and used the silver quarters as a store of value and not as a medium of exchange. And they spent the bad money. So right now we have good money, Bitcoin, which increases its purchasing power. And we have bad money, US dollars, right?
Fiat.
That we know, fiat, yeah, fiat in general, that goes down in value over time. And people are still willing to accept it. So we spend it. Now there's the inverse law, which is Thier's law, which is regardless of legal currency laws, merchants and sellers of goods demand good money because they no longer want to deal with bad money. So I believe that when enough people figure out, when there's a boiling point of figuring out how bad fiat is, people will demand good money, and that good money is Bitcoin. So the adoption of or the transition from store of value to medium of exchange for money doesn't happen because people want to spend Bitcoin. It's because people demand to accept Bitcoin or a good money. So that's Thier's law that comes out to play in that case. So that is yet to come. We're not at the medium of exchange with Bitcoin. We've attempted it before. We did it before there was a layer 2, and it just didn't work because it's a broadcast transaction layer, which is really data inefficient, really slow. And all of that is intentional. People say, oh, my altcoin is better because it's faster. No, it's less secure, it's less decentralized, and it does not have the Schelling point and the protocol network effect that Bitcoin has. So it won't be successful like Bitcoin as money. It might have a different use case, but it's not money, right? So I believe that with the addition of layers on Bitcoin and with time and people understanding what you and I understand, that people will begin to demand Bitcoin as payment. Just as I do coaching and I have a discount when people pay in Bitcoin. So I'm incentivizing the use of Bitcoin from people. And that's a real use case, right? I'm giving a discount. That's a use case for that currency or that money.
That's very interesting stuff. Yeah, I agree about when you really think about fiat and what it is, you know that it's always going to be inflationary. It's always going to lose value over time. So I always, tell me what you think. I'm getting ahead of myself. I always see the value of stuff like, for example, real estate and stocks. You talked about even Bitcoin, gold. I see them, they're gaining value because the dollar, the medium of exchange that you're valuing it in is losing value. So it's kind of like, I'm trying to explain my grandmother. My grandmother is like, old school, obviously. I'm trying to explain to her, Nana, you're your house is not worth more because it's better. It's actually more decrepit, it's more old, it's got better, worse plumbing than you. It's because the dollars that you're evaluating, the dollar is worth less. So that's, you know what I mean? That's why the value seems high. It's not your house going up and this going up and assets going up. It's a dollar losing value. This brings me to my next question. And correct me if I'm wrong here, Bitcoin is inherently deflationary. It's the opposite.
Yeah,
Because there's less and less supply. Nobody could create more, unlike fiat, where they're just printing every year.
I will make a distinction there, but I do want to address, your grandma there. The older somebody is, the more they should recognize inflation because, my grandma growing up, I used to be able to buy a chocolate bar for 5 cents. Well, why is it $1.25? Why is it $1.50 now?
Or like
right?
$5. I think it's more than that now. Yeah.
Sure. Right. But why, right? Why is the price of things going up? And you're bang on because actually humans are inherently deflationary. We get more efficient at building things. We get better technology. Things should actually go down cheaper. In value, yes. In price. Things should get cheaper, right? And TVs are a great example. Electronics are a great example. I just bought a TV for $300. It's 60-inch flat screen. That's insane to think about that 10 years ago, right? That you would have to get a big box TV. It was plasma, it was giant, it was heavy, and it was thousands of dollars, right? And those were dollars back then.
Same thing.
Computers, everything.
Laptops.
Everything that humans do is deflationary. So why do we have an inflationary currency? And the central banks, they aim for this arbitrary 2% of money debasement. So they add more money supply to the supply of money, and they aim for 2%. This is a completely arbitrary number. I don't believe that it should even be 0%. I think that it should be -% because everything around us is getting more efficient. And so we live in a deflationary environment. However, if you tell this to a regular economist, they'll say deflationary environment is incredibly bad. Everything will collapse. Everything will break. And that is 100% true. And that's because we built the system on debt and credit. Right. And in a deflationary environment, the debt becomes more expensive because the money becomes more valuable, right? And the debt becomes more valuable. So we have inflation because they want to. Yeah, they have no choice, and it's beneficial for debt holders, and it basically is this stealth tax on anybody that saves. So there's the Cantillon effect or the Cantillon effect, where it benefits people that are closer to the money printer. So people with more privilege or more ability to gain access to credit benefit more than people further away from that. So sort of a system that perpetuates inequality. Okay, so let's get back to your question. That was a long tirade there. Your question was, is Bitcoin deflationary? Well, Bitcoin isn't actually deflationary. I would say that Bitcoin has a fixed supply issuance that we all know. We can all look out all the way to 2140 when Bitcoin stops inflating. But right now, there's 3.125 Bitcoin, new Bitcoin being released into the economy, into the Bitcoin network every 10 minutes, roughly, right? Every new block. So that's inflationary. But we can see that. We can predict that. We can model that into our metrics.
It's set in stone. It's not like the government where they say, oh, well, this is our debt this year and we need this much. And it's completely known, and that's the difference.
Exactly. And so when you have something that is completely known, you can measure against it. We have these systems. I mean, even right now, there was a jobs report that everybody was evaluating the economy on, and the jobs report got revised just a couple of days ago. And so that metric was incorrect, and everybody was measuring against it, and then it changed, and now everybody's remeasuring against it. That's what happens so the Fed controls the interest rates in the US. They basically dictate what the cost of money is to some respect, right? And the bond market can respond, and all debt can respond to that. But they have control over what the economy does to some respect. And it's unpredictable. We just have to rely on them to just change it at will. And this is what made Silicon Valley Bank blow up a couple of years ago. the Fed constantly talked about, oh, we're not going to increase interest rates. They were near zero interest rates. We're not going to increase them. We're not going to increase them. And then this bank, they put their balance sheet in long duration Treasury bonds,
Yeah.
thinking the interest rate wasn't going to go up, and those bonds go down in value because they did raise the rates, and then that made their assets completely illiquid when people were trying to withdraw their money. They had to sell at a loss. They go into receivership. And that's all because they trusted what the central bank was saying, right? With Bitcoin, there's no trust. That's what's so cool about Bitcoin, right? With all other systems we have to trust. We have to trust somebody. With Bitcoin, it's software. It's all programmed in.
Yes.
If you can audit the software, but there might be some layer of trust, like if you're not technical and you just have to trust that this software does what people say it does, right?
Right.
But it actually does. So you just have to look into that. And then once you realize that, you say, okay, well, the supply issuance is fixed. 2140, there's no new Bitcoin. So then it doesn't become, I mean, it might become deflationary because people lose access to their keys, and then there's a little bit off the market from there. But it isn't inherently deflationary. It just has a max supply. And so all these things become known variables, and you can measure everything against it. And that's the third use case and the last step of money. You know, we talked about store of value, medium of exchange. Third one is unit of account. We now use the US dollar largely as the unit of account, and it gets debased at rates we have no idea of. We have to trust the M2 money supply, the numbers that come out, they're delayed, they might be skewed, all this stuff. That's what we measure everything about. But it's like it's trying to measure a mile with like a ruler that just constantly changes. Whereas with Bitcoin, it's fixed. We know exactly what it is. It's the perfect unit of account as far as I'm concerned.
It's like the inflation rate too. Like they say it's 2%, 3%. But then you have Michael Saylor saying that's complete nonsense. It's like it's been 6 to 8% a year for the last 100 years or something like that. So this is where you say you can't trust anything. So you touch on a few points. On a few of these, what makes Bitcoin so special versus other assets like gold, for example? For me, the two things that attract me the most is nobody controls it and there's a limited supply. What other you want to expand on that? What makes it so special?
What makes it so special compared to gold? Gold is something people compare Bitcoin to quite often. People, right now a very common narrative is that it's digital gold. And when you compare these things, you begin to understand the failings of gold. Gold was the commodity money. We transacted directly with gold. And then when basically the telegram was invented, we needed a faster money because people were able to make deals over the telegram, send a deal. And then the money takes a month to get there because it has to go, on horseback, the gold coins, the gold bricks, whatever. Coach has to go there, deliver the gold. And that whole time you're trusting somebody that deal's going through. So the money has had a problem where it became too slow for the technological world we were going into. Right. And so we needed a faster form of money. And what they decided on, because, we didn't have the internet and the cryptography and all these different aspects, was the paperization of gold. So they created centralization of gold held in vaults. And they said, here's this paper note. And we can even, we can send this way quicker. We can transact with this directly, and you can redeem it for gold. So it was the paperization of gold, centralization, which led to the problem of people printing more gold notes than they actually had gold available, which is what we currently do, but we don't even back the dollars with gold. So we have something with banks, right? Banks are the vaults that I was referring to, which is called fractional reserve lending, which means if $100 comes into the bank, they can lend out $90 of it and keep $10 in reserve. And then what happens there is that ends up in a bank as well, and then that gets lent out. So we have fractional reserve doesn't just begin and end with one bank. It happens it has this runaway train. It's crazy, right? Yeah, it's crazy. It's crazy. So that was the shortfall of gold, is that it was expensive to transport and expensive because it needed security. I mean, there was highwaymen, right, of robbing stagecoaches for gold.
Yeah. The boat sinks or it gets robbed or it gets whatever on the way there. Of course, there's all kinds of problems because it's a physical thing, right?
Exactly.
So what do you think of guys like Peter? What's his name? Peter
Peter
Schiff, who
Schiff.
always says Bitcoin is nothing. It has his argument. He's a big gold guy. He loves gold. That's what he does. And he says because it has no intrinsic value, but gold has intrinsic value. So let's do a crypto related to gold instead, so you could redeem your gold, kind of like in the old days where it was tied to physical gold. What do you think of that whole argument?
That's just paperization of gold again. That's the tokenization of physical gold. It has the same exact issues. It still needs to the physical gold still needs to be enforced in the physical world. Somebody needs to audit the vault and say this gold is here that you've tokenized, that you're
That's true.
transporting on
Yeah,
digital rails. It's a complete fallacy. Peter Schiff, he loves gold because he sells gold. He makes money from
I know.
selling gold.
Yeah,
He hates Bitcoin because it brings him a lot of attention and a lot of other investors that also don't understand Bitcoin to his gold selling platform.
I figured
That's
that.
it's he's an engagement farmer in my opinion.
Okay. Interesting. So, let's see. Man, I could talk to you for days probably. The Bitcoin versus gold debate, we talked about that. I get that a lot as well. I see that a lot. What's going to happen when all 21, so you said 2140, all Bitcoins are going to, no new Bitcoin is going to be produced, but I believe Michael Saylor said by 2034, 99% is going to be. What happens once all the Bitcoin is mined out?
Yeah, well, so I mentioned earlier how every single 4 years the value, the purchasing power of Bitcoin has increased higher than the halving amount. So I believe that's going to continue to happen. So the value of Bitcoin is going to increase even though we're only giving out 3.125 Bitcoin per block. The next time it's 1.6 or whatever it is. That 1.6 is going to be worth more when that happens than the 3.125 is today in purchasing power. So each new epoch, each new 4 years, the value of that Bitcoin goes up so much that it still makes sense economically to mine. So the real question there is the mining and the hash rate that goes towards acquiring these new Bitcoin and protecting it. What it does is it also protects the network. So the real concern there with mining is what happens when 99% of the Bitcoin is mined. There's very little subsidy, or 2140, there's no subsidy. What happens there? Well, right now, part of the mining reward is fees. So if I send you Bitcoin, I incentivize the miners to include my transaction in a block by giving them a little bit of Bitcoin. It's very cheap to do because we have so many layer twos that are very effective at keeping people away from the base layer, but that hasn't been the case in the past and potentially won't be the case in the future. So what I'm saying there is mining fees will begin to become a bigger and bigger percentage of the rewards that miners get. And I also believe that there will be more and more intelligent miners out there. So people mine Bitcoin for the chance to get Bitcoin or the percentage to get Bitcoin if they're mining in a pool. But the Bitcoin miner is a computer that's hashing, right? And its main output is actually heat. So if you work in an industry, like you have a greenhouse, or you have, you dry food, or you need heat in any of your production, you could set up Bitcoin miners to produce that heat, and you're getting paid in Bitcoin as well. So you're subsidizing your heat costs instead of just a straight resistance heater. There's also all sorts of renewable energy that is intermittent, that doesn't need, the grid doesn't need the energy during the sun when the solar panels are absorbing all the electricity. So Bitcoin miners can step in and be demand for electricity when there's no other demand. And that's going to increase the hash rate. And even if they were less profitable than today, even if my theory of every 4 years Bitcoin will become more profitable, even if that doesn't happen, they can get electricity for so cheap that it still makes sense for them to mine. And there's something called the difficulty adjustment. So every roughly 2 weeks, the difficulty of mining a new block adjusts so that the average time adjusts to 10 minutes per block. And what that does is, say there's a whole bunch of hash rate that comes on the network, those blocks are going to become mined quicker than 10 minutes. And then at that 2 week mark, it's going to adjust for that amount of hash rate that was on the network. And then it's going to take longer. And some of that hash rate, if they have older machines or expensive electricity, they become unprofitable to mine at that point. So they shut their machines off. And then what that does is it lowers the amount of hash rate on the network, which makes the blocks come out faster. And the difficulty adjustment at the next 2 weeks adjusts downwards. And then it becomes profitable for those miners to mine again. So the difficulty adjustment sort of like makes up for whatever. And this is something that other commodities don't have. When, say, gold, gold becomes really, really valuable all of a sudden. Me and you, we're going to get our pickaxes out. We're going to go pan for some in the rivers and try to find us some gold, right? Because it's so valuable. And that's going to increase the supply and that supply will decrease the value of that gold. With Bitcoin, there's the difficulty adjustment built in, which compensates for that. There's nothing else like that in the world. There's nothing like the difficulty adjustment that is so perfect. And there's nothing with absolute scarcity either. Gold, we have no idea how much there is. Exactly. Kind of back to the gold debate here.
Yeah, but, no, it's good. I like talking about this because we don't know how much gold there is. It reminds you kind of like the diamond business, that dirty diamond business where they're hoarding it and not, we found 50 million tons of gold, price is going to drop like a brick, right? Exactly. That cannot happen with Bitcoin. It's impossible. That's why I really tracked it. Yeah.
And with diamonds are a great example because it's an artificial scarcity. It's not true scarcity. Diamonds can be created artificially, incredibly cheaply. What happens if gold can be created artificially? I mean, alchemists have been trying to do that forever, but alchemists and technologists are getting better and better. So that's a great example of that. And sorry, I've lost track of the original question. It's very easy for me to go on tangents.
It's okay. It's normal that we're doing this, but going back to the gold miners, I find the Bitcoin miners, I find that whole business very, very fascinating because you hear a lot of them are going out of business, and I kind of make the comparison to gold producers, right? Where there's not really like 5,000, 10,000 gold producers out there. Of course, me and you could go, try to find some gold in the river. But there's only really, if you look at how many gold producers there are, there's only like a dozen. There's Barrick and Wheaton, and it gets concentrated. Do you think the same thing is going to happen with the miners? I mean, you got like CleanSpark and Marathon and Galaxy. Maybe some of them are miners and do other things. Like, do you think it's going to get more and more concentrated into like bigger players? And is that good for the network, you think?
So it's possible that happens, but there's also, I did go off on a tangent there, but I did want to go back to the other reasons for people to mine when there's no subsidy, and that should help explain this, which is excess electricity. So, hydro dams have excess electricity. People can tap into that and mine Bitcoin. There's also incentives for governments to mine Bitcoin because the miners get to decide which transactions to include. So if governments are doing transactions with each other or, cross-border or something like that, they have an incentive to mine so that they have an opportunity to create a block and include their transactions. So I think that because of those reasons, and like individuals, like, I live in a cold climate, I have to heat this office. I can set up a Bitcoin miner and heat my office with that. And I'm getting paid to do that instead of just turning on the baseboards. And that effectively will help decentralize the hash rate. Now, if everybody does that around the world, it's going to really decentralize the hash rate. So the centralization or the mining that you're talking about there is an incentive to sort of become more monopolistic with it because there's the advantage of scale. You have to buy new machines. If you do that in scale, you'll get discounts. You have to build a warehouse. If you do that in size, it becomes cheaper. If you get energy contracts, you're going to want to be a big consumer of electricity so that you can demand cheaper prices. So there is that natural incentive for centralization to happen like that. But I think Bitcoin Bitcoiners and the Bitcoin network cares about decentralization in all aspects. And so mining becomes an aspect of caring about the decentralization of it. And so a lot of mining right now happens to mining pools. So that's another aspect of centralization, which means if I was to plug in a miner, I could try to solo mine, but because it's such a little amount of hash rate, the likelihood is so low that I'm going to hit a block. So instead, I could contribute my hash rate to a mining pool and get paid out based on my hash rate when they hit a block. And it's not exactly like that. They kind of pay you out no matter, except for one mining pool called Ocean, which pays you out directly based on your hash rate contribution. And they also allow the individual that ends up hitting the block within their pool to create their own block. So they can they decentralize the aspect of block creation. So right now, these public miners all basically will include the highest paying transactions, even if that's ordinals, which are like NFTs or JPEGs or what some people deem as spam on the network that isn't a financial transaction. It has a different motive or that isn't necessarily the use case of Bitcoin, although the use case of Bitcoin is subjective. Yeah. But if you're contributing to Ocean and you hit a block, you can decide to exclude these things from the blocks, and you can decide to include other transactions into the block you create, which effectively decentralizes one of the most important points of the Bitcoin network, which is block template centralization. Because if people have control over the block templates, they could exclude transactions. And that's effectively really important, I would say, because, say I got some Bitcoin from somebody that had it on Silk Road, and then all the governments around the world, it's very hard for them to collude like this, but they all say that's dirty Bitcoin, you can't spend it. If one miner from Ocean allows me to include that, I can send that transaction, I can send that Bitcoin. So it becomes it's people call it a permissionless network, and the decentralization of block templates increases that permissionlessness aspect of Bitcoin mining.
It makes there's less and less of an entity that controls it. It's more like, it's kind of like perfect democracy, kind of. That's how I see it too. Quick question. You see stories in the news of these people that have a lot of Bitcoin, that mined a lot of it. They lost the key. I remember one story that freaked me out. That guy was paying hundreds of thousands of dollars to comb a dump field where there's garbage to try to find that USB key. What happens if someone just loses their keys, loses that Bitcoin? What happens to that Bitcoin in the system?
The Bitcoin is always going to exist. It just exists on the blockchain in a wallet that nobody has the private keys to. So so nobody can get access to it unless in the coming years somebody develops quantum and the public key is available, then they could reverse engineer the private key from the public key. But essentially,
is it lost though? Is it sucked out of the system? Like, is it just even less supply? Or
yeah, you can think of it that way because it's less supply that's able to ever hit the market. But it's technically still exists. Bitcoin never doesn't exist. It's always within the blockchain. It just means that, like, the ownership of Bitcoin is the ownership of private keys. So if you lose your private key to your public wallet, then you don't own that Bitcoin anymore. So that's the ownership of Bitcoin. It's not owning a device like a hardware wallet that Bitcoin's not stored on there. That's just a signing device that has your private key built into it, and you're able to send a transaction. And that sending the transaction is you owning Bitcoin. So it effectively takes it off the market if somebody loses. Yeah. So there's estimates of, I don't know, 500,000 missing Bitcoin from people just early days getting it when it was free, mining it on a computer. This guy threw out a whole computer that had a hard drive in it. And he's since given up on that guy looking for that Bitcoin in the dump. So whatever it is, I think it was $1 billion worth of Bitcoin is effectively off the market because of that.
That's crazy. That's just so crazy to think about. Okay, what's your take on, let's move on to maybe some MSTR and strategy, which is, pretty popular nowadays. Michael Saylor's everywhere. I love his podcasts. I mean, everything he says is great. What do you think of these Bitcoin Treasury companies like MSTR and so many new ones popping up trying to like copy that? What's your take on that?
Yeah, my take is that every single company in the world will trend to its Bitcoin holdings and its ability to acquire Bitcoin. That's what all the valuation of companies will end up being in the future. Right now, we measure things on PE, future cash flows, this kind of metrics. It's all going to become what is your balance sheet of Bitcoin and how much Bitcoin can you realistically acquire into the future? And strategy is just ahead of the game on that. Right now, their operating business is basically break even. I think they're profitable now. They have unprofitable periods, profitable periods, but they've since created a strategy of acquiring Bitcoin through arbitrage, through issuing debt instruments and using the debt interest. So say they pay between 8 to 10%, they're able to buy Bitcoin with the cash that they receive for issuing the debt instrument. And that Bitcoin is going to grow at an average CAGR of between 25 and 60. I mean, that's historically it's 50% CAGR, right? Compound annual growth rate. And so that outpaces the debt that they've used to acquire that Bitcoin.
Yeah,
That's largely the strategy. They're also in passive funds, which means that there's just constant buyers for the common stock.
yeah.
And that puts a premium on the common stock as well. So their common stock or their market cap plus debt or plus liabilities is higher than the value of their Bitcoin holdings. So when that's the case, they can issue new shares into the market, sell those shares for cash, use that cash to buy Bitcoin, and they can acquire more Bitcoin per share, even with the added dilution. So that's basically the strategy of strategy at this point, right? And they've created all sorts of really unique products, especially the preferred instruments, Stretch, Strike, Stride, and Strife, which all have, they're all targeting different markets. So there's all sorts of investors that can't buy Bitcoin. They have to buy debt instruments. They have to buy things with some sort of downside protection.
Yeah.
They want some sort of income orientated product, perhaps. And Bitcoin is just literally, they're not allowed to buy it. So instead, they can get access to parts of the sort of exposure to certain aspects of Bitcoin through MSTR's products. And as you said, there's all sorts of companies. I think in the last 30 days, there's 28 new companies, public companies that have acquired Bitcoin. And it's for their own value. You know, like if they acquire Bitcoin, the market receives that fairly well at this point, and their market cap will increase because of that on average. They also are able to continue to just do the copycat strategy of what MSTR is doing and acquire Bitcoin, increase the Bitcoin per share, and be highly successful in whatever jurisdiction they're in, because there's every single market is going to have demand for Bitcoin exposure through an equity, which is a different type of instrument than Bitcoin itself.
Yeah, Michael Saylor says if you want to outperform Bitcoin, if you want amplified Bitcoin, you buy MSTR. And then there's all those products, which, you know, each of them is kind of, one is, you know, the Stretch, the latest one is competing with money market, or, you know, it's the safest one. Then there's one that really competes with long-term bonds. There's one that competes with high yield corporate junk bonds. So it's very, very interesting what he's doing. He's basically raising debt to buy Bitcoin, paying the interest because he thinks that Bitcoin is, the fiat, it's going to be worth less and less, and Bitcoin is going to be worth more and more. And that's where that arbitrage takes place. Just kind of like when you're borrowing money at 5% to invest in the S&P. If you think the S&P is going to go up 10% a year, you're borrowing money at 5, you're arbitraging that 5%. So he's kind of doing the same thing. That's how I understand it.
Totally.
Okay.
Yeah, you got it.
Cool. Do you think he, you know, is he right by saying, you know, if you want to outperform Bitcoin, you buy MSTR? Personally, do you own Bitcoin with a wallet? Do you own some MSTR? How do you personally invest in Bitcoin, if you don't mind me asking?
Yeah. I mean, historically, he's been correct. Since they've adopted Bitcoin in 2020, they've outperformed Bitcoin, right?
Yeah.
So historically, he has the right to say that. Into the future, I'm not sure, but I mean, the way I think of it as well is you could have cash, or you could invest that cash into a company with the expectation of them using that cash that they can raise through that to acquire more cash for you and work for you, right? That's the idea of investing. So it's kind of the same thing. You could own Bitcoin, or you could invest in a company that's actively acquiring Bitcoin. And one of those might outperform, right? If that company continues to perform well. So you could think of it just as simply as that as well, as an investor. And so for my personal portfolio, I have registered accounts which I could either invest in a Bitcoin Treasury company or or an ETF, right? And for
Like a
me,
TFSA, RRSP.
exactly, exactly. And so in those accounts, if I invested in an ETF, I'm actually getting less Bitcoin every single year because there's an expense ratio with that.
Right.
With a Bitcoin strategy or a Bitcoin treasury company, I have the possibility, there's added risk, there's operational risk, there's all sorts of different types of risks, but there's the possibility of me acquiring more allocation to Bitcoin, although not
Yeah.
directly, but I don't own the Bitcoin directly when I own an ETF either. So I sort of see those risks as being crossing over between the ETFs and a company, the custodian risk. So that's how I think about it. I don't add money to my registered accounts at this point. If I get income, I buy Bitcoin directly and I hold it on cold storage. But I have registered accounts, and the vast majority of that is in MSTR. I hold MSTR and I sell covered calls against it for my own strategy,
Okay,
and I hold a
you
bunch.
do it yourself.
I do it myself,
Okay.
yes, and about half of it I do myself, and half of it I have an MSTE in a TFSA, which is so key. I mean, it's amazing the tax advantaged use of that. It's crazy. I think that's a great opportunity for Canadians personally. The MSTE product by Harvest.
We're in agreement, man. Music to my ears. I'm sure you've seen my videos. There's a whole debate about which one, Misty. There's like six, seven, eight, probably more that are going to coming out. I like Misty a lot from Harvest. I think they do. If you think it's going to grow and do really well, you kind of want the least amount of covered calls. It's only normal, right? And
Yes,
MST Harvest is typically they always do near the 33% range mark. Plus, there's that leverage, which I really like as well.
same. And
So
historically, like since the foundation of that ETF, because of that 25% leverage, it's tracked really well with the underlying MSTR, and because their mandate is to sell 50% or less covered calls on the shares that they have, so they cap the upside to some degree, right? That's what covered calls can
of
do,
course,
but 50% of at least 50% of it is uncapped. So you see that price appreciation plus the 25% leverage makes it track really, really similarly to the MSTR, but you're getting that payout. And if you have it in a TFSA, it's tax advantaged.
tax
So
free.
yeah,
Yeah,
yeah.
yeah, it's exactly what I've noticed. That I've actually noticed that with all cover call strategies, covered calls with not more than 50%, plus the 25% leverage, you're tracking very much similar to the underlying, the volatility of the underlying, the performance of the underlying. It's my favorite format. I'm sure you see my portfolio. That's
Yeah.
my funds are all 25% leverage covered calls. Just to expand on MSTE,
Yeah.
I spoke to Michael Saylor quite a bit. Although they could go up to 50%, they typically want to sit at 33.
Okay.
They don't. It's very rare that they'll go to 50%. They're more conservative, which I like. So, little tidbit of information there.
Yeah,
You know,
that's good to know.
I think they'd rather lower the distribution a bit. Personally, this I'm guessing here, but I feel like they rather lower it a little bit than move up to 50%. That's the feeling I get. I
Yeah.
could be wrong on that. Maybe it depends on certain months, but
I
that's
like that
possible.
better too, because
Mhm.
I mean, growth is more efficient, like overall. And I think you've mentioned this before, like your portfolio isn't aimed at total returns. It's an income portfolio.
I
But I
would
think,
say it's
you balanced it a
income
bit,
without
but
ignoring the total return.
okay, gotcha. I
Yeah.
see. But there are other covered call ETFs or yield bearing ETFs that are much more aggressive at the distributions. And there's one like the US version of MSTY, Yieldmax is very much geared towards just providing that dividend income at and so you don't see the growth of the share price itself necessarily
No,
as
the total
much because
return
of that.
is, yeah. I don't look at share prices. I always look at total returns. Of
Okay.
course, Misty is going to have less total return than MSTE if MSTR goes up,
Yeah.
right? But if you're in a period, and this is the rule for all cover calls, right? If you're in a period of flat or down, of course MSTY is going to do better because they're giving up more upside, so there is no upside,
Right.
right? But I look at things long term only. I'm an investor. I'm not a speculator, and I don't want to ignore my performance either because I love the income, but I don't want to ignore performance. So that magical thing in Canada that they found was let's add 25% leverage, not more than 50% cover calls, and that seems to do the best in terms of tracking the actual, getting the similar performance to the underlying. Sometimes better actually if there's a big bull run, especially because interest rates are cheap in Canada as well. That
Hmm.
plays a factor as well. But I seen
Very, very smart.
and I like your videos. You've done a lot of videos. And by the way, everyone, if I'm gonna put your Forrest channel under, it's called Bitcoin, not crypto. You do a lot of MicroStrategy, cover call stuff, a lot of covering that, which is really really cool. Um, so I take it you prefer Bitcoin versus like MSTR with cover calls, or that's your preference, right? To always trust the Bitcoin more. I talked to a guy in Dubai. He lives in Dubai. He says, I have 99% of my money in Bitcoin, but I need USD to pay my bills and stuff. So I'll put it in Misty to
Hmm.
get. I don't care about the total return. I want maximum yield to pay my bills, and then I'll just put everything I can in Bitcoin. Is that kind of what you're doing? I got a feeling maybe.
Yeah, I mean, yeah. So there's different value propositions, right? I really
Hmm.
highly value the ability to actually take self custody of Bitcoin. When you own shares on a brokerage, the brokerage owns them. When you've registered them with an account, a TFSA, RRSP, there's an additional risk vector there. I'm not saying these risks are high, but to me, it's more of a value thing. Part of why I'm so invested in Bitcoin in general is not only because it's up and to the right historically, but because of the values that it brings to my life as well. There's a whole ethical debate. And with ethics, I subscribe to the world that Bitcoin could create. I think, and so with that comes the responsibility of self custody and actual ownership. Where if I needed to, I could leave the country, memorize 12 words, or write them down in a cryptic way, and bring that with me, bring that value with me. Whereas everything else is confiscatable in some respect. And I don't mean to say this to sound paranoid or anything, but it's just, that's just an aspect, and that's a value of that Bitcoin provides that nothing else quite provides. Even gold, you can't really bring gold with you. You can look back into history when people were trying to escape some sort of situation and bring value with them. The gold, they'd braid it into their hair, they do whatever, and it was oftentimes stolen from them. And you can actually see times throughout history where people have brought in Bitcoin with them, and it's been much easier and more successful. So that self custody aspect is very valuable to me. And I want to support the network itself by owning the asset. And there's just different risks. There's different risk vectors to custody Bitcoin and non-custody Bitcoin. And I think that you can see outsized returns with something like MSTR, but it isn't actual Bitcoin, and it never will be. You're never going to have in-kind redemption to get your Bitcoin per share, even if they use that as a KPI on their website, So
Yeah,
just
you have.
different values.
Yeah, no, I agree with you. You have to sell MSTR stock, and there could be risk associated with that, or whatever, or it has to be done on a Monday in a business hours. So there's additional
Yes.
things. Personally, I consider myself, I'm more old school. I have the utmost confidence in brokers and the IBIT ETF, which, if you look at all the cover call ones, what do they hold? The IBIT ETF. I trust BlackRock. I think if BlackRock says, "Oh, we lost all our Bitcoin," I think there would be riots in the street, and who knows. So I'm personally okay with that. So before we take some, I appreciate your time, by the way. I really appreciate you staying.
Hmm.
um, I want to tell you my personal why I really like Bitcoin, my understanding, what I really like about it. Tell me if I'm right or wrong in any of these assumptions, and tell me which ones you agree with. What I really like about Bitcoin is, first of all, the hard supply. I mean, that's the most attractive thing to me.
Hmm.
21 million, can't make more of it. Unlike anything, that's what makes it unique and special for me. No one is really controlling it. Yes, there's Satoshi. We don't really talk about it. That maybe he has a lot of Bitcoin. We don't know who he is, but there's no really central governing thing. And then I also learned recently, like let's say it gets attacked by quantum, there's this consensus mechanism where if 51% of the network agree on something, they could upgrade The network, I've heard that. Have you heard anything like that, or what's your thoughts on that, by the way?
Well, I mean, upgrading the network is always voluntary. So it's really about the nodes. Okay. So,
Like, if nobody controls it, how could there be consent? Like, how are people getting together? Is it the miners? Is it like, I heard, oh yeah, it's the CEO of Coinbase. I heard on a recent podcast with Sean Ryan talk about this.
yeah, so there's something called soft forks and there's something called hard forks. And these are changes to Bitcoin on a fundamental layer. And it's basically voluntary whether you adopt or not. And
Okay.
if you don't adopt, you continue running Bitcoin as is. If you do adopt, you run a new version of Bitcoin or some upgrade to Bitcoin. And a soft fork is backwards compatible. So a soft fork upgrade can be changed and you can upgrade to it or not, and Bitcoin just operates the same. A hard fork is a completely new network or a consensus change that is backwards incompatible. So it's not really necessarily like a 51%. It's the fact that like I'm a node runner. So I have a Bitcoin node and I can voluntarily upgrade to a change in Bitcoin Core or Bitcoin Knots or whatever Bitcoin implementation I use. And if there's a proposal for, say, a quantum resistant cryptography
Yeah.
wallet, I can upgrade to that and I can move my coins over to that voluntarily. That may or may not be a hard fork. I'm not 100% sure on that, but it makes it so that consensus happens on a like sort of a voluntary and economic and who actually owns Bitcoin. So there's owning Bitcoin, the monetary unit, and then there's running your own node, which actually allows you to sort of have a vote in the direction of Bitcoin, of how Bitcoin changes. You can either adopt a change or not adopt a change and move the network in a certain direction based on that. And it's not something that somebody could take over. Like I mentioned earlier, there's 20,000 reachable nodes. It's not like a company could just spin up 100,000 nodes and just change Bitcoin, because if those 20,000 actual nodes don't also change, they'll just continue running Bitcoin as is. So
Right.
Bitcoin will continue
Okay.
operating as is. It's really all of the nodes that are important, which there's a varying degree of importance to each node. Say Coinbase's node is very important because they have a lot of transactions go through it and a lot of people use it.
Hmm.
My node isn't really important to me because I can validate my own Bitcoin. I don't have to trust Trezor or Ledger when I use their wallet and their node. I can see and see my Bitcoin is on the blockchain, and I can sign a transaction without asking somebody else to use their node. So it's very important to me, and then I can decide whether I adopt a change to Bitcoin or not. And everyone else that runs a node can do that as well. And you can kind of look back into history where there's been highly influential players in Bitcoin with a lot of miners and a lot of support trying to make a fundamental change to Bitcoin. This happened in the block size wars in 2016,
I
2017.
heard about that. What is that? The block size
The
wars.
block size wars was a hard fork. So there was somebody named Roger Ver, and he was very influential in Bitcoin, has a lot of Bitcoin. He brought on a bunch of miners that wanted to make a change to increase the block size of Bitcoin. There wasn't consensus to do that in a real way. So everyone continued to run Bitcoin as is,
Hmm.
and they created a different type of Bitcoin using the same base code, but changing the block size and changing it so the block size would grow at certain intervals as well. And because it's an entirely different network, they also needed to convince all the miners to come over, and they didn't. And they needed to convince all of the users to come over as well. And when a hard fork happens in that way, because it's built on the same UTXO set as Bitcoin, everybody that had, say, if you had one Bitcoin at the time, you would
Yeah.
also have one Bitcoin Cash. So you were automatically given that same UTXO on the other network. So then there was the debate of the individual of saying, okay, well, do I keep this Bitcoin Cash? Do I keep this Bitcoin? Do I sell one? Which network do I join?
Yeah.
And that there was a big discussion of that. And basically, by increasing the block size, you're making it harder and harder for individuals to run nodes because you're making the demand for hard drive and compute power for your node, which is a computer running software. You're making that demand higher, which makes it more expensive and more difficult and more, you need to update it more often, right? The hardware. So the end result of something like Bitcoin Cash is the only nodes that operate are massive businesses with data centers because they're the only ones that can handle the blockchain because it's so massive. The end result of Bitcoin keeping its blocks smaller is that I can buy a $300 mini PC and run Bitcoin knots on it and validate all my transactions, and people can do that all around the world. And I can have a vote in the future of Bitcoin software. So basically, that's also the Bitcoin or the block size wars is a lesson in two things. It's a lesson in that nodes have the power to dictate what Bitcoin is, not developers, not influential people. It's the everyday nodes. And the other thing is that what was it going? Oh, the network effect of Bitcoin is incredibly strong. So there's all this perceived competition within Bitcoin and cryptocurrency. We all think, oh, Ethereum's number 2. What if it gains market share? What about Solana? What about Bitcoin Cash, right?
Yeah.
Well, the network effect is so with protocols that there's a serious switching cost. If you were a Bitcoin holder or a Bitcoin miner, you had to decide. You couldn't do both. You couldn't hold Bitcoin. I mean, you could hold one Bitcoin and one Bitcoin Cash, but if you sold one to buy the other, there's a real switching cost to that. You're putting your economic value in one thing over the other. And so you have to make that decision. Whereas with other technology networks like MySpace and Facebook, there was no switching cost. I could have a MySpace account. I could have a Facebook account. There's no economic cost to me switching. So the network effect of financial protocol like this is such that it really embeds itself and makes it very difficult to compete with. So when Bitcoin Cash was not accepted as a change in Bitcoin itself, and they decided to fork and create an alternative cryptocurrency, they had to try to convince the network. They had to try to convince the users to come over, and the users said, "I'm going to stick with the cryptocurrency that has the largest network, has the most use case, has the most ability to succeed in the future."
Right.
And so it's really hard for anything else to take market share from a protocol like this.
Okay.
And yeah.
You think with time, very, very technical, I'm learning a lot. Do you think with time, as the Bitcoin network gets bigger and bigger and bigger, it would be kind of impossible for another war just because or to change it? Do you think it gets stronger with time, the Bitcoin network, once it grows?
Yes. It absolutely gets stronger with time. It gets stronger and stronger and less likely that anything else could compete with it. I already think that nothing else competes with it directly. And I think all these other cryptocurrencies that pretend to are competing on different layers, like smart contract capabilities and platforms like that, which is a totally different value proposition to me. And those markets are much smaller and much more speculative. And the risk to reward ratio is much different than with Bitcoin. So to me, they're not valuable. They're not a valuable investment. They're not somewhere I'd park my capital because of that switching cost, because I would have to I'd be short Bitcoin to hold Ethereum, right? Which is not something I want to do. But there's also, I think that software, can be changed, and Bitcoin is software and it's programmable money, and that is an advantage. And Bitcoin is very difficult to change, as we saw with the Bitcoin, the block size wars. But there might be future situations where changes need to happen, and those changes can happen. So again, quantum is a big risk that people point to. Yeah. Largely it's overstated, and it's much further away than people think, and much more theoretical than people think. So it's a possibility that we have real big arguments. Some would consider a war, maybe a battle, an argument of, okay, we should make quantum resistant wallets, and every wallet that doesn't switch to it will just leave, and quantum can attack those coins and steal them. Or we make it so that they're frozen, or that we basically get rid of those coins. So there's going to be a debate, okay, which one is better? Or maybe we redistribute those to all the holders. Like, there's going to be discussions of what is the best move forward when there's existential problems or things that need addressed. And I think the block size wars was about scaling, right? Because the reason people wanted bigger blocks is because it's cheaper to transact with it, and it's faster to transact with it. You can put more transactions in each block. So that's the real limiting space, is the block, right? It takes a certain amount of data to move Bitcoin, and that's what you're charged for. That's what you're paying miners to include, is the data size. So in a bigger block, there's more room, there's less congestion. But what we've decided with that was to scale in layers, to create a peer-to-peer Lightning network that does. So in the Lightning network, it's like a bar tab or like an abacus, where you lock up Bitcoin and then you transact within that layer, and then you can settle, and the people that hold the certain amount of Bitcoin that's transact within the Lightning network get allocated the proper Bitcoin that is attributed to them after all of the internal payments happens. And it's still peer-to-peer, and it's still Bitcoin, and it still supports the Bitcoin network when people open and close channels. So that's what we decided to scale with instead. So it was a real debate on how to scale. Either you do it on the base layer, on the layer one, or by increasing block size or increasing transaction throughput on the base layer, or you increase transactions on another layer of Bitcoin, using Bitcoin as the final settlement. And that's what we decided on. And that's what, and you can just see, like, people will debate. I mean, if some Bitcoin Cash people come into the chat, they'll say, oh, Bitcoin's failed. Bitcoin Cash is the real Satoshi's vision. You can peer-to-peer, blah, 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 blah. But they're wrong. You look at the market, you price Bitcoin Cash in Bitcoin, and it's trending to zero. The market has decided that Bitcoin is the real Bitcoin, and the network effect continues on. So there could be something like that happens in the future, but it's about how do we handle quantum, or how do we handle, right now there's sort of a battle going on with people including spam in Bitcoin and people wanting to filter it out, and different changes right there. So I wouldn't necessarily call it a war yet, but there's always these internal battles. And because Bitcoin's so hard to change, which I believe is a really fundamental value proposition of Bitcoin and makes it actually decentralized, whereas all these other cryptocurrencies, there's usually one influential figure or a foundation that can basically change whatever they want, which makes it not secure, because again, we go back to the Federal Reserve. They're able to change the interest rates whenever they want. That's the same system, right? All these other cryptocurrencies are the same system as fiat in that way. So Bitcoin being hard to change is part of what makes it secure.
That's super interesting. Now, when you say you said we, who are we talking about? The holders of Bitcoin, the people running the network? And wouldn't people like Strategy or BlackRock, because they have so many, have a much bigger vote and bigger say? Like, how does that whole dynamic of making decisions work, if there's any arguments or changes that need to be done in the network?
Yeah, so that's a great question. And you also mentioned Satoshi having a bunch of Bitcoin, and
right.
And a lot of people would think, oh, if Satoshi comes back, he's going to be hugely influential and be able to change Bitcoin however he wants. It's really not the case, because a lot of people have claimed to be Satoshi. Maybe I'm Satoshi, right? We can all just say we're Satoshi. How do you prove that? If you move a transaction, you might be able to prove it. But even still, Satoshi walked away so long ago, and Bitcoin has changed so much since then, that maybe we wouldn't respect Satoshi if he came back. Maybe we don't care about the changes he wants to implement. So the same thing is true with Strategy and with BlackRock. They hold a lot of Bitcoin, the monetary unit, but they can only run one economic node that really has a say in how Bitcoin, the network, and the software changes. And they can say, like, if BlackRock says, we're going to create BlackRock BTC. This is the real Bitcoin. Everybody move over to this network, or make this change with your node. I'm going to say, no, I'm not making that change. And you're going to have to hard fork. You're going to have to create an alternate Bitcoin, because I'm not updating to your change. And that's what everybody would do.
My software is what
I'm not updating my software. Okay. And so then their only option is to do a hard fork and create an entirely different network. And if they keep the UTXO set, I'm going to get BlackRock Bitcoin in the same amount of that I hold regular Bitcoin. And I'm immediately going to sell that BlackRock Bitcoin because I know that it's worthless. And I'm going to buy real
Ah,
Bitcoin with it. And that's what people did with Bitcoin and Bitcoin Cash. They sold their Bitcoin Cash and bought more Bitcoin with it.
that's
And so
incredible. That's
I
cool.
would I would absolutely love for BlackRock to create a hard fork because then that's just something that I can sell and buy more Bitcoin with.
That's crazy. So it makes it better and safer, I think, as time goes on, and harder, like you said, to change as it gets bigger and bigger and bigger. That's really cool. I mean, I'm learning so much. I hope my audience is. I know it's very, very technical, and I went
Hmm.
to computer science. I didn't finish, but it's pretty. It's technology. I mean, it's incredibly intricate technology.
Yeah.
Last question before we take some member questions. I have to get to them. You know what my portfolio is. I have a portfolio. My wife and I have about 2 million CAD. It's all
Hmm.
it's everything. Okay, we don't own property. What would you do if you were me? Would you, and you have to stick with the income stuff. Okay, would you like
Okay.
sell all the S&P, Nasdaq, and just go all in with like the harvest, Bitcoin, all the cover call stuff? I mean, it's fun to think about because my income would increase probably by like 50%. But what would you do? I'm just super curious about your thoughts on that.
Yeah, I mean, so I would do what I've done, which is I've slowly moved everything over to something that is Bitcoin related. So again, I really believe that everything will eventually trend to the value of its Bitcoin holdings and its ability to acquire Bitcoin. So Bitcoin itself, maybe a covered call. I think there's BTCY, right? That's a Canadian one. I don't know. There's other options out there for
Yeah,
that,
there's so
but
many without the leverage, that one. Yeah, by purpose,
sure.
the OG ones. Yeah.
Yeah, yeah, and yeah, MSTE, right? These are things that, if you look at them, their trajectory is up and to the right into the future, is what I believe, right? And strategy has positioned itself to appreciate with the depreciation of U.S. dollars,
Yes.
right? That is their direct that is their direct strategy. So, and that is what I believe in too, because when I first looked at Bitcoin, I thought, what are the risks to Bitcoin? I started going through them, and I realized the biggest fundamental risk with Bitcoin is central banks and money printers around the world and governments being responsible with spending and monetary debasement. And I laughed, realizing how slim of a chance that is.
Zero. Zero. It's
Exactly.
impossible. Like
Exactly.
Lynn says, the train already left the station. I watched that presentation. It makes complete sense. It's literally impossible for them to do. Like you
Nothing
said, it's a
stops this
debt.
train.
Nothing stops this train. Sorry. Yeah. It's a debt system. I mean, the whole system is based on that.
Exactly. So I would want to arbitrage that. So it might feel crazy to have all your eggs in one basket, if it's MSTE or,
Yeah.
the correlation of MSTR and Bitcoin is such that it really is you're holding very similar assets. So like if the market downturns in one, the other one's going to be affected too. So it
Yeah.
really is very much you're in one basket, whether you hold Bitcoin or MSTR for the most part. But, as Sailor says, how many chairs are you sitting on, right? Do you sit on one chair? Like do you use a wood knife, a rubber knife, or do you use a steel knife, right? You use the best tool that you have available and you have conviction on that tool. And that's what I've done. So that's what I would say that I would do in your position. But maybe that feels irresponsible. Like I came from a sort of a TradFi lens of investing as well with diversification. And I think that I would have been much better. I obviously would have been much better off if I had committed faster. But
Yeah.
it takes time to commit and it takes time to understand the value proposition of Bitcoin. So I don't fault anybody in not having 100% allocation of Bitcoin. But I would suggest, or what I would do is have a very high percentage of Bitcoin or Bitcoin related instruments.
That's
That's what I
fair.
would do.
I'm
Yeah.
at I'm at 20% now, but the more I think about it, literally every minute I think about it more, discuss it with my wife, understand it better, listen to Michael Saylor more, and understand what's going on, the more I want to up it and up it and up it. I just don't know about 100%. Maybe I'll get there one day, like I tell people. Maybe I'll be 50% next year. I don't know. But the more I see what's going on and I understand it, the more, and it helps that the volatility is higher, so the premiums
Yeah.
are higher, so the actual income is better. But
Yeah.
if the income is going to be better, the performance is going to be better, why not? Right. So, interesting take. I appreciate your honesty. And
I would flip that if I were you. The 80-20 rule, right? Flip that.
uh-huh.
80% Bitcoin.
80, yeah. I think my wife's already like, just do, why 20? Just do 25, or it's easier said than done because,
Yeah.
like you said, you talked about responsibility. I do feel it would be irresponsible, but there's other stuff that kind of has a little bit of there's strategy in it. Like there's Harvest's HHIS, so I like that one a lot because I know it has MSTR, it has Coinbase as well. It's
Yeah.
I guess everyone has to make their own decision at the time in life and your risk tolerance. Because I get the question all the time. Should I just go MSTE all in my TFSA and put it on drip, and maybe in 10 years it's gonna do times 10 or times 20? I don't know. These are very, very hard questions to answer, right?
They're I mean, personal finance is personal, right? So
Yeah, yeah, good
it's
point. Yeah.
always dependent on on the person's, like you have income plus growth built in, right? I'm very much growth with some volatility harvesting.
Yeah.
That's my strategy currently, and I'm 10 years younger than you, and my situation is just different than yours. I'm yeah, it's just different, right? Everybody's situation is different. So
I
yeah,
say it all the time. I don't think there's right or wrong. I don't think the best exists in investing. It's what's the best for you.
exactly.
Top question I got from member. What is the goal price of Bitcoin for the next 1 to 5 years? Now, I have to ask you first, there's an insane amount of crazy videos on YouTube about price prediction. That's what the people talk about nonstop. They don't talk about Bitcoin like we did. What is it? How does it work? Everyone's obsessed with the price prediction. Why is that? It's those videos are so silly. They get the most views with the least amount of value. Can you explain why?
Yeah, well, people have a fiat mindset. We all want to see our portfolio go up. We have a bias, a cognitive bias to, being right. We want to be right with our
Mm,
portfolio, and if we're allocated to Bitcoin, we want the price to go up. The
yeah.
other really popular one is, oh, you need this much Bitcoin to retire, right?
Oh,
So people
oh my
people want
God.
to retire on their Bitcoin, and this question is interesting. I think it is interesting to look at, because price is something, it's a metric that encompasses a lot. It encompasses adoption, right? Price is a product of people adopting and buying more Bitcoin. So it is a good metric to measure that. But again, we're measuring it in a broken ruler. So my
Mm,
price prediction, my goal price for 1 to 5 years is that Bitcoin is the denominator, that we value gold, we value groceries, we value energy in Bitcoin. I don't think that's going to happen, but that's my goal, right? That's what I'd like to see. Looking at the fiat price of Bitcoin doesn't make sense when you get deep enough into this rabbit hole
mm,
of Bitcoin.
hmm.
And because you're just measuring it in something that somebody else can print for free.
Right.
It just
That's
doesn't
why
make
I think
sense.
it's always going to be worth more because if you're just going to keep printing it, of course, it's always going to go up forever versus that thing you're comparing it to.
Exactly. And that's why I say, like, it doesn't necessarily need to be the denominator on like TradingView or anything. But by saying that we denominate other things in it, it's more looking at what is the purchasing power of Bitcoin in the future. What can it buy? Not what is its fiat denominated price, but can it buy something else of relative value? Can one Bitcoin buy a home instead of 6 Bitcoin that it costs today in Canada? Right.
Right.
So, measuring it in that way makes a lot more sense to me. And I don't have any sort of future prediction. I'm not somebody who throws around, oh, we're going a mega candle, 1 million Bitcoin by the end of the year. None of
That's
that.
why I
I
like you.
I don't know.
That's why I like your channel and what the videos you do. It's more about the important stuff, right?
Yes, yes.
Oh, okay. Here's a great one. This is a great question. Why do some intelligent people, such as Bill Gates, who has a background in technology, computer science, Warren Buffett, Charlie Munger, I get it why they wouldn't get it. Bill Gates is a technology guy. Why do you think they don't support Bitcoin?
Yeah, one thing interesting about Buffett is the last speech he gave at the Berkshire conference. He talked about how one of the biggest risks to their investments is the U.S. dollar, and he didn't talk about Bitcoin, but he talked about how currencies can be a big risk because they're out of your control.
Yeah.
And a Bitcoiner seeing that is like, oh wow, that's it, right? He gets it. He doesn't understand the solution necessarily, or hasn't come out talking about the solution, but Bitcoin is the solution to that problem he talked about. With Bill Gates, a lot of people that are very high up in corporations, in sort of the traditional financial system, they have benefited from being close to the money printer. They have benefited from the fiat system, and they have no incentive. There's no need for them to believe in something else. They're already highly successful in the system that they exist in. And if something else replaces it and they're not on board with it enough, they become less successful. So it actually threatens their success. Now, if you can look up billionaires that own Bitcoin. There's Elon Musk, there's Michael Saylor, obviously, there's Mark Zuckerberg, there's all sorts of different investors and billionaires that own Bitcoin. The list is huge, actually. I think the third richest person in Mexico owns a ton of Bitcoin. So there's all sorts of people that do understand it and have moved over to it. But I think that Bitcoin fundamentally threatens the fiat system that a lot of these people have benefited from.
Yeah, I love what Michael Saylor when he talks about it, his Microsoft presentation, and he says Bitcoin's on a need to know basis. And he's like, these
Yes.
companies, they don't need Bitcoin until you do, right? Kind of type of thing.
Exactly. They've been highly successful without it, and they'll just continue
Yeah.
doing. They continue in their circle of competence, right? They'll just continue doing what they're good at.
Okay. Latest, I think we got maybe, I'll try to go through them quickly here. MSTR strategy just released their Q2. The question is related to that. The latest MSTR earnings have lowered the stock. Does MSTR still intend to buy more and more Bitcoins? When is the maximum number of Bitcoin in circulation? Is there always an end planned? So you think you covered it in a recent video of how they're going to do it going forward, but maybe you want to explain it quickly here.
Yeah, sure. So they've created Saylor in that Q2 earnings said that they have their iPhone moment, which is stretch, which is this preferred that they plan to stabilize between $99 and $101, which effectively will mimic a money market fund or a savings account or even a stable coin, which I've kind of come up with the theory that tokenization platforms will tokenize Stretch, and it will actually be a stable coin that's backed by Bitcoin and provides a yield. So that their effective yield on that will be around 9%. So they're almost double money market funds or they are double actually money market funds at 4 something percent. And so there's going to be a huge amount of demand for it. And there already is. They oversubscribed their offering from 500 million to 2.5 million. And they're going to use all of the cash that they'll continue to acquire by more people buying these instruments to buy more Bitcoin. So yes, MSTR, the price went down after earnings. I think a lot of this was revised jobs data. It was tariff news. It was Bitcoin being affected by that. It was a correction in Bitcoin and MSTR's price after a run up. And it was just all of those things combined, basically. That Q2 earnings was incredible news, incredibly bullish news. They also plan to reduce the amount of at the market common stock offering that they do. So they do this, I've mentioned it earlier, but they sell common stock into the market and arbitrage the premium they have compared to their Bitcoin holdings. But that is an artificial seller in the market, which provides selling liquidity for shorts and for people selling covered calls, and it helps dampen the price in an actual sense and in an optic sense as well. So the market perceives this ATM probably more than it actually is, and therefore the price reflects it. And they've changed their guidance on that, so that they're now not opportunistically selling new shares into the market unless their MNAV is 2.5 per times or higher. and they'll only use their common stock ATM below that to pay the dividends and interest from their convertible bonds. So by doing that, they're lifting the cap off of the price of MSTR's share price. So I expect the common stock to creep up to that 2.5, and then they'll start, hitting that ATM again, and it'll start sort of leveling off. But it's incredibly bullish for MSTR in my mind, and they're going to buy a ton more Bitcoin. There's no stopping the Bitcoin train. There's no stopping the MSTR train. They own almost 3% of the total supply, and there's no reason for them to stop at this point.
Yeah, I think they're getting smarter. I highly recommend you guys, if you're interested, watch the video on that. You did a recent video on it. You could even watch the Q2. But I believe the video was called "The MSTR ATM Story Has Changed." You actually released that a few hours ago, I believe.
I sure did.
Okay, awesome. That's a cool one to watch. Why is MSTR more volatile than Bitcoin itself?
Well, there's more perceived risk. There's more people trading it. There's leverage within MSTR, so debt adds increased volatility based on risk profile. They're very low. They have a very low amount of debt, and it's convertible, but it's still perceived as additional risk. And there's people, I mean, volatility is always because of mispricing, right? There's some people that believe that it should be worth more, and some people that should believe it should be worth less. So MSTR and Strategy has intentionally created a trading instrument for traders to come in and push the price around and to move it with size and create volatility, because, their STRK shares, preferred shares actually benefit from increased volatility because there's a call option built into it.
Right.
Their convertible bonds are more valuable because they're convertible. So this, and because of the volatility, there's more options market. And when there's more options market, there's more people needing to buy the underlying to sell calls against it, which increases demand for the shares. Volatility is vitality for all of those reasons. And they've done a lot of things to create an environment of volatility intentionally, because it will boost up the share price in the long term.
As a cover call ETF investor, I love volatility. I mean, it's obvious why. Last one, my friend. When all 21 million Bitcoin have been mined by 2040, or I think 2140 or whatever, miner revenue will depend entirely on transaction fees. The price and purchasing power of Bitcoin will adjust to the lack of supply. The scarcity of Bitcoin will make it more attractive to investors. How will this supply/demand dynamic affect the future value of funds like MSTE or Bitcoin itself, I would say?
Yeah, so it is 2140, so it's quite a ways off. But this is just the supply and demand dynamics. So every single time there's less Bitcoin being released, every 4 years roughly, that means there's less supply on the market, and if demand stays the same, the price goes up to drive out new demand. Price is always determined on the margin, so it's buyers and sellers. The last buyer and last seller determines the price. The last willing seller is willing to sell at a price, the last willing buyer, right? So if there's less ability to sell because there's less Bitcoin in circulation, because there's less new Bitcoin circulating, that will have a direct effect on the price of that asset. And this is historically seen. There's something within Bitcoin called the 4-year cycle, and a lot of that is it can be argued for many different reasons. Liquidity, global liquidity being one, the U.S. election being another. These things all correspond with the 4-year cycle, and the other one is the miners getting half as much Bitcoin, or the mining becoming twice as expensive in a sense as well. So that all reduces the supply, and that will increase the price. And historically, we've seen that happen. After a halving, there's a delayed effect, and then price rips up. And we've seen that every single time. And then there's a 4-year cycle of it having some sort of correction, which it's debatable whether there's a fundamental change, because we've already seen a lot of the public miners adopt a hodl strategy, like Strategy is. So they're not selling the new mined Bitcoin into circulation. So they're effectively creating a halving before there's another halving, because they're reducing the available supply. That isn't the case for all mined Bitcoin. Some are hitting the market. But largely, the halving becomes less and less meaningful because of the amount of Bitcoin being released. It is still a supply demand adjustment that happens, but it potentially becomes less and less effective at changing the market dynamics. And the market dynamics is really just the price driving out new sellers, wherever those sellers come from. 70 or 69% of Bitcoin is held by individuals, and a lot of that from the first few years of Bitcoin. And those people will eventually say, you know what, I have 1,000 Bitcoin. I'm going to sell 100. I'm going to go on a big trip. I'm going to buy a mansion. I'm going to do whatever I want, because 100 Bitcoin is a huge amount, right? So they're going to do whatever they want, and they know that their asset is going to appreciate over time. But also, the only thing, I like to say this, the only thing more scarce than Bitcoin is your own individual time.
Yeah.
So people say, oh, why are these OGs selling? Don't they know Bitcoin's going to go even higher? Of course they know Bitcoin's going to go higher. And they're not selling all their Bitcoin. I'd be very surprised if they did, because they have the proof that their Bitcoin is going up in value, right? They've seen it happen. They've seen it go from 0 to 100,000 plus in dollars. So that's more of the supply demand dynamic. I feel like it's less and less affected by mining and new Bitcoin being released, and more so about the demand. And the demand is this corporate demand that we have. We have the ETF demand. We have the strategy and strategy copycats all around the world buying way more Bitcoin than is being released. And it's driving out new sellers. And when those new sellers, like MSTR is a black hole for Bitcoin. Once they buy Bitcoin, that isn't getting back into the circulation. The ETFs potentially, when somebody buys an ETF, they could sell the ETF, and the ETF is supposed to respond by getting rid of that amount of Bitcoin that they've allocated to it.
Correct. Yeah.
So the strategy is not like that, right? If Strategy's price goes down, they don't sell their Bitcoin. Once they acquire Bitcoin, they have that Bitcoin held. So it's effectively off the market. So it's there, and that goes for all the other committed Bitcoin Treasury companies out there. There will be ones that fail. There will be ones that aren't committed, whatever. It's going to be insignificant compared to Strategy and maybe Metaplanet and 21 Capital, a few of the big ones, right? But that is largely the story right now. And you can see, in my opinion, we've seen lack of downside volatility with Bitcoin this cycle, because these are institutional traders. These are investors that understand markets, and they will algorithmically buy, as well as the OTC desks need to source that Bitcoin. So they're buying on downturns. They are stopping the Bitcoin. There's a bit of a floor to Bitcoin's price this cycle. Doesn't mean it can't drop like it has in the past, but this is just what we've seen so far. And that lack of downside volatility, in my opinion, is driven by institutional adoption and the algorithmic buying of Bitcoin and acquisition into Bitcoin treasury companies.
Interesting. Yeah, it makes sense. I've been waiting for like a drop, like all of a sudden 115, and I see 112, and I go check the strategy dashboard a few hours later, it's starting to crawl back up. It's like it's not going down, because there's always someone willing to buy, which is like which is really what I like about it. It's a perfect supply and demand asset that nobody controls, which is great. Forrest, you've been with us a long time. I really appreciate it, my friend. It's been incredible. So guys, if you're interested, Bitcoin, not crypto, that is your Bitcoin channel. Tell me about it, what kind of videos people could expect, what other things you do on your side.
Yeah, so it's a Bitcoin-centered channel. I'll talk a lot about strategy as well. I'll have guests on. I do 3 videos a week, all Bitcoin educational stuff, and then I do 2 live streams, one solo and one with my friends Rajat and Jor, and we do it for Maple Bitcoin as well, which is another channel we have. Another thing I want to shout out real quick that I'm launching tomorrow is this website that my friend and I built called Sats Arcade, which is, short for Satoshi's Arcade, and it's a play to earn platform where you go and play video games and you earn Bitcoin. So it's a way for the whole idea of that platform is that people will go there and be completely uneducated about Bitcoin. They'll play some video games, earn some Bitcoin, and throughout playing, they'll learn more about Bitcoin. And they'll actually take custody through a Lightning wallet. You get paid in Bitcoin through the Lightning network. And it's a fun, interactive sort of place to learn about Bitcoin is the idea there.
Awesome. Cool idea. Well, thanks again. Hope to have you on in the future as well. Thanks so much for your great content that you put up that's educational and not like those insane videos that we talked about. I absolutely love that. And we'll talk soon. Thanks again, man.
Thanks for having me on.